The bearish kicker pattern is a 2-candle pattern that is bearish. To be a bearish kicker, the first candle should be a long up candle or white Marwood. The second candle needs to be a long down candle or black Marwood, and it must open below the first candle open. As well, the second candle high must be lower than the previous candle's low, so just like the bullish kicker, a gap is formed. So this pattern is another rare one because of the gap, and also because the candles need to be strong up or down candles with only a small wick. It really shows a complete switch of momentum in the market from strongly bullish to strongly bearish, and that is the power of the pattern itself, as it suggests that bears have just completely overpowered the bulls and a new downtrend should be in force. And here's an example of a bearish kicker in Wells Fargo, shown by the red arrow. Notice the gap between the open of the second candle and the low of the first candle. So, as mentioned, the bearish kicker in its purest form doesn't occur very often. That's because of the gap and because the bearish kicker requires 2 opposing candles with very little shadow or wick. You can see that the pattern didn't occur for any of these 11 markets during our 16-year period, and we only recorded 152 bearish kicker signals in our stock universe during that time frame. Because of this, I don't think we can really draw too many conclusions from these results, which is a shame because we have some good results here, especially in stocks. For example, shorting a bearish kicker pattern and holding for 3 days produced an average profit of 0.4% in S&P 100 stocks, with a win rate of 55%. And the pattern also did well with other holding periods. So there might be something to this pattern, and we might want to do a bit more work to see how significant these results are. Overall, this is one of the best short patterns that I've found. Next up, we'll look at the bullish engulfing pattern.